How to buy a house with a tax lien. You're gonna love this video. In this video, I'm gonna show you how to buy properties for literally pennies on the dollar. And while you're waiting for all this to happen, you're gonna get 16, 18, even 25% on your money. It's literally a double win on all of that. I'm gonna show you how to do all of that in this video. Also in this video, as a little bonus at the end, I'm going to show you how you can take your retirement account and explode it into several $100,000 on one transaction with no costs, penalties, or chargebacks from the government whatsoever. So stick around. All of that stuff is inside here, and you know the drill. If you have a question, ask me. Type it in there. I answer all those questions. Subscribe, thumbs up, do all the good stuff that you like to do in there. So let's get right into this. Buying a property through a tax lien certificate is simple but complicated on that. This is a very unique strategy, yet it's been around for a while. So why don't more people do this? Why don't more people know about this? Because of the nature of the beast, so to speak. So let's go back in time. First of all, let's talk about tax lien certificates. What is a tax lien certificate? It is a first position lien on a property due to delinquent property taxes. In over 2,000 jurisdictions across the United States, once a property owner becomes 1 year delinquent on the property taxes, the county government is obligated to bring those up individually to the public. That's you and me, because they need the revenue. Now let's back up. These are property taxes. What do property taxes support on the county level? Almost everything. Okay, this is such a pure investment strategy because the county has a budget almost exact. This is how many properties we have. This is how much taxes are coming in. When that money doesn't come in, they cannot function. The number one thing that property taxes is always going to pay for in any county out there is education. Probably anywhere from 55 to 65%. Then it goes down the list. Fire department, law enforcement, parks and rec, hospitals, emergency services, it goes on and on and on. So think about this. The county can't function without this. So they're like, hey, we need this money. So after 1 year, if you haven't paid and you're late, we have to get that money. By law, we have to offer these to the public. The county's not allowed to participate. They can't go, okay, we want all this interest. They get the interest if they pay during that 1 year because they're late. But after that, it goes to the public. So you and I go, oh, I like this. Put up the money, they give us a certificate, it goes on file at the county courthouse, and that bears an interest rate. Like I said before, 16, 18, 25%. Now let me stop right here. You're not buying somebody's home. I'm gonna repeat that. You're not buying somebody's home. All I'm doing is giving money to the county. I'm typically never dealing with the county or the property owner. They have nothing to do with it. They owe the money to the county. Okay, this is cool. The county will do most of your work for you. So what happens is this: when the property owner comes down to pay off the property taxes, the county is going to see that you're the lien holder of record, and by law, they have to issue a check within 5 to 10 business days. Everybody's happy. The county's happy because they got their money. The property owner's happy because you bought them time by participating in this, and you're happy because you got the interest rate. Everybody's happy. So it's a win-win situation all the way around. Now let's talk about this for a minute. When I put that money up, the county, by law, gives the property owner a time period to pay those taxes off. It can be anywhere from 1 year, 2 years to 3 years. So that property owner has, let's just keep it at 2 years, 2 years to come in. But during that interim of waiting, I get 20%, I get 18%, whatever that is. So who cares? It doesn't matter what happens with the stock market. Doesn't matter what happens with the bond market, gold market, who gets elected president, who doesn't get elected president, what war happens, all of that stuff. Nothing affects the yield on this at all. It's locked in and mandated by state law. That's all fine and dandy. What if the property owner doesn't pay? This is where it gets really good. Now, we're going to talk about research in a little bit, but I'm not just buying a lien because it's available. I want to make sure that the property, the lien on, is actually one that I would want. You heard that right, want. Because if they don't pay the property taxes in the prescribed amount of time, I legally can foreclose on that property thus getting the property for the back taxes. And in that foreclosure process, because I'm representing the county's lien, I'm a superior lien to all liens and encumbrances, including IRS, including mortgages, including banks or any of that. I am the lien holder of record. I'm almost like the county in a lot of ways. So when I foreclose, I have the superior position. This is key. Now, the mortgage companies know about this. You're not sneaking up on them by any stretch of the imagination. If you read a mortgage, it's very clear on page 8790, whatever it is, that big stack you sign, that if you fail to pay property taxes and jeopardize the mortgage position, they have a right to pay your taxes and call the loan due. So they'll pay your taxes and then foreclose on you. Okay, so the mortgage companies aren't worried about these. You're not sneaking up on them. They know the rules, all that good stuff. They just have to be notified on it. So that's how a tax lien certificate works. There's no ambiguity. You either get the property or you get the interest rate. And a lot of investors say, you know what? I don't want the property. I just want this big interest rate to come in there. Okay, so I'll show you how to most of the time get redeemed. Understand, the underlying security in this whole investment strategy is the fact that the property is there to protect your investment. That you can't always predict who's going to pay and who's not going to pay. But I want to be very clear. When I'm buying tax lien certificates, I'm buying it for the rate of return. Let me give you an example. If I spend $20,000 and I buy 15 liens and there's a 2-year redemption period, 99.9% of them are going to redeem because they've got that 2-year redemption period, letters are going out and all that good stuff. Okay, but I'm doing research on all of those properties to make sure if one does not redeem, I actually want that property or it has a value. What do you mean by a value? All property has value. Not necessarily. So what if I just go down to the county willy-nilly and just go, oh, I'm going to buy a lien over here because I heard Sean say it's paying 18%. Don't do that. If you do that with your blindfold on, tell them that Joe sent you. Don't tell them I sent you. Okay, that doesn't make any sense because what if the underlying value is not there? So let me give you an example. What if the property's, I don't know, 15 feet wide and 100 yards long? It's really not worth it to anybody. And there are a lot of properties out there like that. Or maybe it's in a section of town that doesn't matter if somebody gave it to you, you wouldn't want the property. It's not buildable, it's landlocked. There could be a number of different reasons that this isn't for you. And that's why the research is so crucial. So when I'm looking at these lien lists out there, they could have anywhere from 3,000 liens, 30,000 liens, up to 80,000 liens on one list. So you have to master the art of whittling that down. This is called a short list. So let's just say I'm looking at 15,000 liens in the list. Number one, I want to figure out what area of town is the best. I do that by figuring out what the average price of houses are in that particular area. Once I figure that out, I go, okay, well, that's the good area. I'm going to buy liens in that. I only want single-family residential properties. Whoop, there goes a bunch more goes out the window. I only want them in this particular section. There's a bunch more go out the window. Okay, now, is it possible that you're going to see a lot of piece of crap properties on these lists? Absolutely. And that's where the research comes in. Just because it's in a nice area doesn't mean it's a nice property. So I'm going to look at these properties. Look at these properties. It means I'm not just going to Google look at them. I literally want boots on the ground. I want somebody to look at this property and say, the structure is there. Okay, before I put my hard-earned money up and raise my hand and say, I want the lien on that property, I want to make sure there's actual property there. Okay, the amount of times I've seen something not there that was supposed to be there, well, if I had a dollar, as they say. Okay, so you have to do your research. The other difficult thing about tax liens and tax deeds is the list doesn't exactly give you an address to the property. It's got the parcel ID number, which is the social security number of the property. But I got to look at that and do research based on that and verify if they have an address are correct. Okay, because believe it or not, the counties have made mistakes before. So I want to make sure there's all sorts of things. Is the value there? Am I buying a piece of property that I'd want later on? Is it in a section of town that I would like? All of these factors are going in to determine whether I'm going to purchase this property or not at the sale. There are a lot of factors here, as you can see. This is a very profitable strategy because one of two things and only one of two things is going to happen. If I do my research correctly, okay, I either get 20%, 18%, 16%, 36% on my money when they redeem, or I get a property and I own that free and clear of all liens and encumbrances, including a mortgage, including anybody out there. You can see how this can be very attractive. Now, in other videos, I'll show you how to circumvent the whole tax lien situation and get the property free and clear every single time. But for now, you need to understand there are a lot of factors you need to understand before you raise your hand and just start buying willy-nilly. We don't want willy and we don't want nilly. We want to do this correctly. And if you want to do it correctly, I've got some great training on this. It's free if you'd like it. Very extensive that goes through the whole aspect of investing in tax lien certificates. Just go down to my website. It's down there somewhere, higginsmethod.com. That's complimentary. And when you sign up for that, I'll also send you my new book, America's Secret Investment Strategy. All of that is yours. This is Saen Higgins saying God bless and good luck.